Hello, and welcome to Taxes in 10, where we take a tax topic and break it down in about 10 minutes. My name is Mark Barnes, and I'm the managing partner of Potential CPE. This episode is on unemployment benefits. Are unemployment benefits taxable? Almost 50 million Americans have filed for unemployment benefits since March, and millions are receiving an extra $600 per week through pandemic unemployment assistance. Oftentimes, these payments show up and no taxes have been withheld for federal or state. Does that mean they aren't taxable? The answer lies in Internal Revenue Code Section 61, or IRC 61. Gross income for tax purposes is defined as follows. Except as otherwise provided in the subtitle, gross income means all income from whatever source derived. What exactly does that mean? All income is taxable unless Congress specifically says it is not taxable. On the bottom of the page is a footnote that directs you to Internal Revenue Code Section 71 and up, which is where income is defined. IRC 85 is specific to unemployment compensation. Yes, your unemployment benefits are taxable unless Congress takes action. In December 2009, Congress passed the American Recovery and Reinvestment Act. This bill created a provision that allowed the first $2,400 of your unemployment to be non-taxable. This created an opportunity to receive some benefits and have them be tax-free. Anything above that would be added to your other income and taxed accordingly. If you look at Schedule 1, Line 7, you will see a specific line for unemployment benefits. Next January or early February, you will receive a 1099-G from your state. How much tax are you going to pay on your unemployment benefits depends on the federal and state tax rate. Federal tax rates for ordinary income, such as unemployment benefits, starts at 10% and goes up based on your adjusted gross income. States vary from 2% to 10%. 7 states have no personal income tax. Those states are Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming. Additionally, California, New Jersey, Oregon, Pennsylvania, and Virginia exempt unemployment benefits from tax. The rest of the states will vary from 2% to 10%. Now that you know that they are taxable, how do you pay them? You have 4 choices. 1. Do nothing now and pay when you file your 2020 tax return next year. This is a bad idea for anyone that does not have money sitting in savings. 2. Make an estimated payment. You can make an estimated payment at any time. Anything paid between July 2nd and September 15th will be considered paid in the third quarter. This can be done by visiting irs.gov/payments, where you will have the choice of paying with your checking account through the Direct Payment tab. You will need your account and routing information for this, or by credit or debit card. Be aware, the IRS will add a charge to your transaction to cover the merchant processing fee. This is about 2 or 2.25%. 3. Contact your local unemployment office and request taxes be withheld from your payments. They will have you submit a Form W-4V or voluntary withholding request. On line 6, you can choose 7%, 10%, 12%, or 22%. In a minute, I'll show you how to determine which amount to select. Option 4. When you start receiving a regular paycheck, have additional taxes withheld. This can be done by submitting a new W-4 to your employer. On line 4A, enter the amount of unemployment benefits you received while off work, and more taxes will be withheld from your paycheck to cover the additional income you received. To calculate the amount you should have withheld, you will need a copy of your 2019 tax return. You will use the information in Box 16 and Box 11B on your 1040. Take your calculator and enter Box 16 and divide by the amount in Box 11B. In this case, $7,029 divided by $50,753 equals 0.1384, or 13.8%. This is your effective tax rate. Even though this person is in the 22% tax bracket, they don't pay 22% on all their income. If you normally get a refund, I'd choose the 12%. If you normally cut it close or owe a little, I would choose the 22%. You'll just have to use your best judgment. If you opt to make an estimated payment, you can use the same method to calculate your tax percentage, then multiply by the amount of unemployment you have received. Let's say you received $8,400 in unemployment benefits. Multiply that by the 13.8%, and your estimated payment would be equal to $1,159. Remember, you can log in and make an estimated payment each week if you choose. You can use the same method on your state taxes by finding your tax liability and dividing by your taxable income. Make sure to hit the subscribe button and keep up to date on all of our Taxes in 10 video series, and give us a like on Facebook at facebook.com/potentialcpe.